Well, hello everyone. Hey, it's Shooter. Welcome to Weekend Box Scores Swing Trade Notes Edition. I'm going to do it a little earlier today because my grandbaby's coming over, and then hopefully we get everything done after that. We still have to do. So please review our disclosures at the end of this presentation. Now, I had a very hard time going directional off of my risk off last week. We had what's referred to as a whaley breath thrust, going into weekend, and Walter Deemer's sort of one of the experts on that kind of thing. And it needs to be repetitive. So we need to have, in other words, these pushes need to continue to really change the direction, but that was pretty aggressive. I mean, we had a lot of flow come in. Mr. Market definitely thinks the Fed is done. And we also might have had quite a bit of a FOMC high, just off of that thought, that, hey, things are going to turn around quickly. But I don't necessarily see that. But I see it more as a dollar-driven rally. We broke below our November 15th, 22 support, and I think we're heading to 102. So that in itself, to me, supports continuation. So this next week, and really the week afterwards, we will see whether or not the markets are continuing to hold up, or that was the sort of an FOMC high, and then it's going to end like it has in the past. So only time will tell, but that's our thought at this point. TLT, got a nice bounce here. We've now extended on our target one count to maybe 91.46, and then we head back down to 82. Now, note that does not change the longer term count with a target 3 back around 80.51, and that comes in, it's way the heck out here on date and time, but that'll come in January 24, maybe first quarter or second quarter, I would think. So we can have a bit of a rally, as long as we don't get more than 50% back. I mean, we could push all the way to $100, and it wouldn't bother me with the way this count is, just with the direction and the slope. So that's just my thought. Now, earnings this week, a couple of them I'm really interested. I'm interested in how Uber has handled their new rate policy, and also how they're absorbing both Lyft and Uber were all penalized for holding back money to drivers. And it was a multi-million-dollar settlement, fairly large. So I want to see how that hits their P&L this week. So that will be telling for me. I want to understand that metrics a little bit. But I do still, I'm going to go back to my Tesla piece. If the robo-taxi works, and if the Department of Transportation approves them on a grandiose scale, the most logical thing for anyone to do, any of the autonomous, folks, Tesla being one of them, would be to acquire an app, because none of the taxi services have a decent app. I mean, they stink, the ones that do have one, and they're segmented all over the country. So to have a globalized app that's been functional and tested, I think gives them an advantage for it rolling out. Now, I don't understand the timeline on this. I don't know if Musk could even swing it with his Tesla purchase. With his purchase of Twitter. I don't know. But Roblox is also coming up on Wednesday. TripAdvisor, I think we might see some, that's Monday after the close. That might show a little weakness in travel. So that's Under Armour is always a decent one to play as well. We got Twilio Wednesday after the close. Unity after the close on Thursday. So not that I'm really aggressive chasing anything long yet. I just don't think it's going to hold up. Oh, and I skipped D.H. Horton is on Tuesday before the open. That will tell us a little bit more about housing. But, at this point, earnings have been decent. They haven't been horrible. So, one thing we chased this week was pins. Just a beautiful looking setup here. Nice, clean primary wave setup. That stayed in this base for this long period of time. And mainly that volume candle, is what caught my attention where we are after very positive earnings and an increase in digital advertising. Now that also should roll. So I would think that Meta on next earnings and, some of our other leaders, probably with the exception of Twitter, just because so many advertisers have left them, should see a positive upside going into the next quarter if that's the case. But right now, we're looking for a target one of maybe $40. We're chasing 31 and 35 calls, so just keep that in mind. All right, GLD still in play. Really hasn't done much since the initial pop. We're sort of stuck here. I think we need with escalation, it's not become just a hedge thought to me. I think there still is some decent upside in gold just based on the circumstance. But we're sort of stuck here this week, but we're still looking for that 200 target on our intermediate wave 3 here, probably in the coming weeks. Now, let's look at XOM. This really is a Middle East Israel warhead. Something happens in the Straits of Hormuz or whatever, that will be the catalyst that drives this higher. So that's my thought. All right, now let's look at IWM. Now we got a huge gap, but according to the count, 177 is, our top, or we should top on that range, and we should head short. And it's actually extended our 3 down a little more, maybe to $1.47. So like I've said, bounces or flushes beyond a second standard deviation, and I didn't put up my Bollinger Bands with fibs on this chart, typically aggressively retrace. So, that's the setup here. This is a great short. Once we get above that 50-day and we test that, I don't think we see continuation beyond that. Now, keep in mind, this is a drive 1, drive 2, so drive 3 can always overshoot. So we could get back above the 200-day with market strength, but I don't believe that will change this count this far down. There's certain places counts flip, and it's very unlikely that we need some really additional positive catalysts to drive this higher at this point. The banking issues need to get resolved. It's just not going to happen that quickly. At least I don't think it is at this moment. Now, Qualcomm, man, boy, it just got a nice pop off of there. Again, sort of a dead cat bounce to me. I've got my next entry short scheduled at 122. And we're still looking for that target down around 81. My opinion has not changed on this. And CBRE, boy, we got a rip. Good thing we covered those. Next entry short coming around 78. And, should still get a nice push back down to about 60. Now, looking at Airbnb, now notice how it was lackluster compared to the other FOMO. And that's basically what it's telling us, is that even the market participants now believe that Airbnb is going to get hit pretty hard, so they're not willing to chase it. They thought CBRE was oversold, and same with XOM, and they jumped on board and tried to get a piece of it. But it's not as emotionally bullish as some of the other tapes that bounced. So, our target is still down around 100 on Airbnb, whether it be the first quarter or second quarter. I'm hoping it happens quickly and it's not this marathon run, but of course that's not something that we can predict at all. It's, Elliott Wave doesn't give us any time analysis. We have to go other tools from that. But, just looking at our RSI structure, I'd venture to say that we roll over just a little bit above the 50 and then roll back down and probably put in, I'm going to say this is our confirmed low here on RSI, divergent low. So this is a 1 to 2. So then we're going to probably head into maybe a 3 on Airbnb based on the count. All right, looking at the SPY, got a nice bounce. One thing that I noticed, I threw the Bollinger Bands on this one because it started to curve up on the top. But notice that this occurred also in June of 2022. We got this little bump, this little push, which actually is a similar rally in size. And what do? We put in a lower low in price. So that's consistent with my thought on the count. One of the big challenges with Elliott Wave, really any other form of technical analysis, because everything measures historic price. It doesn't necessarily accurately predict the future within a margin of safety. And that margin of safety for me is, sometimes it's as accurate as 2 or 3, within 2 or 3%. Other times it's within 5 or 10%, and sometimes you're not even close and you're at 50. So it just depends on the forces within the market. Now, one of the key factors that I like with the S&P is it likes to do these squeezes and then rolls squeezes and rolls squeezes. And I can't roll back to show you the extent of this. So in a typical retrace, we have basically an equal ABC, an equal ABC, an equal ABC, and then we get an extended ABC, that moves in, and then we have an added 5 wave on here. So, ultimately, I think this becomes an elongated ABC back at trend support, even with the euphoria we had and the triggers that happened last week. I just, I'm not confident that upside is going to stay there. Now, we come in and we put in a lower high up here around 450, right? And then we come back in and put a lower low. That's a trend change. So in other words, this channel would have ended and we started this uptrend. Now, it may only last 1 or 2 legs and then we turn back south. This could end up being an A, we could get a B and then a C. But, at this point, I'm more inclined to think that we get up to the 50-day right there and we see more rejection than we have now. And that 8-day also should see a little rejection because we saw it here. We got rejection here. Didn't even get the strength to get back to it. Didn't get the strength to get back to it. Didn't get the strength to get back to it. We overshot it, put in one divergent high, and then we flushed. So, that 8-day is challenging for the way the tape looks at this moment. That's just my thought. Looking at the NASDAQ. Now, honestly, I don't know. That's some very euphoric daily candles there. We had it here, and then we started our leg lower. We did not have it on any, so it's not a normal bullish push where you grind higher. It's this like fear of missing out mode. Oh, I got to buy this. Oh, I got to buy this. Oh, wait, I better start selling it. Oh, I got to sell more. Oh, no, it's going to crash. I'm out, Then you get this, breakdown that occurs. So this is more what I see occurring here. So if we get up to our trend resistance, I think it will get rejected down. So I came back to a very basic view. I didn't put an upside count because it's way the heck up here, and I didn't put a downside count. I basically went back to my prior high, prior low, and I drew a breakout line and a breakdown line. And I'm going to basically say we're above this 8-day, we're bullish. We're below the 50-day, even though my red line's way the heck down here. I'm bearish. So that's my thought. I really, it's in an I don't know mode for me. So I go back to, I'd rather wait until I have some clear signs of what I'm doing. That doesn't happen very often, but that's what it is. All right, looking at crypto. Now, actually, I meant to leave up last week's board to give us a visual. XRP really moved as far as the size. It was way down over here and like half of this size. So there's a lot of people moved. Look at how much BNB moved. 3.64%, Ether moved 2.31, and Bitcoin moved 7.6. So the altcoins are and you see a little pump. And notice ADA back there at 2.5%. But Solana got hit. So, I'm most interested in this XRP move, Ethereum and BTC. And, ironically, Doge has come up there just a little bit. I haven't added to that position. But looking at Bitcoin, we're still flagging, put an inside bar. I do think we're going to get some kind of back test, but RSI is not telling me that yet. We don't have that exuberance here. We should, really for us to get a back test, we should get up into this overbought status here, I would think, to some degree. In other words, I would turn green here in RSI above 70 a little bit. So I do think we hit that 41,420 or 41,120 and then maybe back test, but we might back test the breakout, but volume has been steady. So, there's someone who's buying, whether it's MicroStrategies, Fidelity, or BlackRock, or a combination of all the three. Somebody is buying. So that is clearly evident. Now, jumping over to GBTC. Now, I'm just having a thought here, and my main thing is that spread is now 9%, I believe, between GBTC and spot. And, one of my concerns here, and it's just, I have these random thoughts when I'm thinking about stocks and charts, everything else. And, my thought here is that when we get the Bitcoin ETF approved, we're going to see some sellers because they're going to take profit. And, the one thing that always concerns me is I don't care how big you think you are, there's always someone that's bigger. And that whale can just steamroll you out of a decent trade. So part of my thought, I want to keep GBTC as a primary, position trade. But at the same time, I can't help but think I need to roll out some way. And the only thing that's really come across my thought pattern is to do micro Bitcoin futures contracts right at the money or a little bit in the money, just to earn that additional leverage up, that additional yield to the upside and take the same risk, or I could reduce my position. So if I start scaling out of GBTC, that will be what I think I'm going to do. I still reserve the right to change my mind when my thought process is still in play, because, at this point, I'm even looking out at January 2025. One thing about futures is they don't decay like options. Now, the downside to futures is if the market goes against you, and let's say, for example, the United States ban Bitcoin, there's going to be a huge hole in your P&L holding those futures, because you can end up owning more money than what you have there. Options tend to insulate you just a little bit, but it depends on how aggressive the drawdown. I've never personally taken a hit from futures, but I've known other people who have, as far as owning options. So you have to keep that in mind with your position size and your risk threshold if you are going to look at something. All right, so let's jump over and look at Ethereum. Maybe we're heading towards this 277, and we've had that from here, and it's just been drifting out. We're above our 1830 resistance band. It's basically as our 8-day, which is good. It's constructive here. Looks better than it has last couple of weeks. Now, XRP. Now, I've got 6260, and we're just above, or not quite there yet, as my 2, and then we're going to break down. So I guess we're going to find out really quick how much XRP is going to hold. But there is certainly a lot of buzz on this. And to be very candid, I regret not putting more on than I did in XRP. I mean, I have a very small position in there, nothing that's aggressive. But at the same time, you really can't bend in this market from your trading. And what I always want is an oversold or an overbought status, oversold, enter, and overbought status to start trimming on multiple time frames. And that's something that you pretty much have to stick to. So, well, hey, folks, that's it for Swing Trade Note Weekend Box Scores Edition. I'm going to jump and do a sector ETF, which will be in chat for members only. So, of course, great trading. Until next time, folks.